So hopefully by the time this class is over, you'll be able to trade price levels like a pro, or again, support and resistance. Now, there are many ways to find support and resistance. I believe in eyeballing. That means looking at historic price action to identify areas where prices reacted or had a difficulty climbing above or below. Now, the reason I use price levels or the word price levels as opposed to support and resistance is I've been teaching classes for 7 years and I've been trading since 1972. Now, I don't have a problem understanding the concept of support and resistance, but it seems like with online trading, so many people have a problem with resistance becoming support and support becoming resistance. And after class, they'll come back to me and say, but you said that was support, and then you used the resistance. And no, that was resistance. It was supposed to be support. It doesn't matter. These are price levels. These are levels that when price is moving up, will impede them from moving up farther or support them below, and just the reverse. And support becomes reverse after price has broken through it. So the easiest way I can explain it to you, that hopefully the concept, not the words support and resistance, the words are meaningless. They are the steps going up as price is moving up, and they are the steps coming down as price is moving down. So if you think of price in an elevator, and as the elevator is moving up, what is supporting you underneath your feet? The floor, and it is your support. And as price is moving up, you're having to go through the ceiling of that elevator each time you reach another floor. And what happens is that ceiling you had to break through to get to the next floor becomes the floor under your feet or your support. And then you have the next ceiling and the next and the next and the next. When price reverses and is coming down, what do you have? You have just the opposite. That floor below your feet is your resistance. And you have to jump as hard as you can to get through that floor. And you fall to the next floor, which supports you at the moment, but you have to jump through it. And every time you jump up, you hit your head on that ceiling. That is your support. And every time you jump down, that's your resistance, because your goal at that point is to go down farther. So they intermix and change very, very quickly. So the term support and resistance reverse. Old resistance becomes new support, and old support becomes new resistance. Now, if we just call this the price levels or the steps as price is going up, and the prices steps as the price is coming down. So this is what makes support and resistance, or price levels. Now, how you determine what levels they should be at or where you would place them, that's a whole different story. Now, I like to use what I call eyeballing. I named it eyeballing. It's not a financial term. It means using your eyes to see something. What it means is going back on historic charts or price chart. Actually, let me pop up a chart. Okay, we're looking at my standard teaching chart. This is the Euro US dollar chart. And we can see that the Euro US dollar is currently trading down here. So the only thing we're really concerned with is maybe price from this level to this level. Okay. When price gets up in this range again, we might be more concerned, but right now we're only concerned in the levels above and below where price is. Now we can also, right off the bat, we can see how strategically important that particular price level was, but that's only in the last 24 hours, all the way back to the third. Okay, so 107,940 has been strategically important. We have lots of opens, lots of closes, lots of candles that are stuck on that price. When price bounced up to the next top of the elevator and went to break that floor, which is that purple level, was at 108,201, and then price bounced off of it and came back down to that floor again. And what was that? Back at 107. So that's a very short-term support and resistance zone. But these lines, I didn't draw on here today. I didn't draw on here yesterday. Some of them were drawn on 3 months ago, and some of them were drawn on there a year ago. Because support and resistance levels hold into the future. And the more times that they have been critical in the current, in the past, as well as supported in the future. So like this line and this line are very, very important. So is this red line, because recently, in the recent price movement, we can see we had these held true. But we didn't get these from the recent movement. We got these by going back on our charts and looking in the past when prices traded in this range. Actually, let's do this so it's a little bit easier to see. I'm going to take and I'm going to put a line on their chart here at the top of the range. Let's say the top of the range is here. So let's make this line yellow, bright yellow, and let's make it bold and thick so we can't miss it. No, I think we better do it this way. And then we're going to put another one on underneath price, where price is right now. These are not support and resistance lines. These are just helping, they're going to help us when we go back and look into the past. So as we go back and look in price in the past, we're concerned where price is in between these yellow lines. So here we go back and we're all the way back in early March of this year, a week or two ago. And we see price was in that range again. Okay. We can then see what price was strategically important. And look at this purple level, how important. We have high, high, close on the line, high, 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 high. This price was very, very important. Look at the green line. This green line, the green dashed line, was strategically important then also. But then if we go back a little bit farther, and we look at every time price has been in this level, we can see the red level back in the beginning of March held true. The purple level held true. Okay. Now let's keep on going back. Okay. And again, we're looking between the two yellow lines is just simply delineating where price is today, the range it is in today. So we can see back here in March 18th, look how well this purple line, the green line held true. But we didn't draw the lines on them. The lines were drawn on way back in the past and brought forward, and they're projected on your chart. See all these lines? These are lines or price levels that when the euro has been near this price in the past, they've been strategically important, and then they are dropped on your charts and they take you into the future. Another way we can secure these is by taking a longer term chart. And if we look at, say, a 1-day chart, and we look for when the euro was trading in this range last time in the 1-day chart, we can go back pretty far and see what was important. So look at this price level here back in 2000, a year ago, April 30th, 2019. Okay, we had a strategic price of 111, but we need to get lower because the euro is trading all the way down here. So we need to go back pretty far. So here, this is it, October 1st, 2019. We can see this bottom price was strategically important, but we need to get still down lower. But the euro hasn't been trading down that low, so we have to keep going back and going back and going back to find when the euro was trading in this range. And that's when these lines were drawn on the charts, way back when. So now that, okay, so now that we're back into the future and in the present, we can see the price points around where around the price that are strategic. So again, if we imagine this as an elevator, and this was the ground level of the building, and the elevator was moving up to the first floor, we can see it had lots of activity on the first floor, moved up to the second floor, stopped there, never made it up to the roof deck or the third deck, came off the first floor, second floor, went back down to the first floor, hasn't gone back down to the ground level yet, and is staying in here between the first and second floor. So is this support or resistance? Do you really care? You only know that this price zone and this price zone are critically important in the movement of the euro today. Oops. Now, once you've isolated, I'm going to show you in a second. Actually, maybe I'll do that now. I'll show with you how we would do these in the past and how an easy way. Once you have these on your charts, they're not so difficult and time consuming to draw on. It's when you're starting from scratch or the price of an asset is at a new high or low where it hasn't been before that you have to go back and do these. Otherwise, they just appear, they're on your chart from the last time the price was here. So I'm going to show you a little bit of a presentation on how to quickly get these very, very easily. It's a little bit time consuming, but once you're, as I said, once they're on your charts, you have them forever. So let me share with that little presentation, and then we're going to go back and learn how to use these in our trading and how to build a strategy around them.
Okay, so here we have the daily chart of the FTSE 100, and as you can see, currently the price is up at the 7,300 level and has spent the last couple of months around the 7,000 level. Now, to demonstrate how to identify and plot support and resistance areas, I'm going to scroll back on the chart to the last time the price was in the same region as it is now. This way we can use the support and resistance areas we plot from the previous price action to see if they have any significant impact on this price action that's happened over the last few months. So I'm going to draw two red lines, one above this price action and one below, very quickly. There we are. Now we want to scroll back and find the last time that the price was between these two lines so we can use it to identify and plot the support and resistance areas for this price region. So if we scroll back, we find that the last time price was in this particular region was sort of December, January to August 2016. So in order to start plotting the support and resistance areas, we first need to identify where they are. And as I said in the video previously, we need to spot the points where price has had a significant reaction. And to do this, we want to find where price has either been heading in a particular direction, has stopped and reversed, like here, or where it has stalled for a significant amount of time before either breaking through a particular area or reversing. So this area here, for example. And to plot these areas, I'm going to take my circle tool and I'm just going to first pick out all the reactions that I can see on this particular region of price action. So as I said before, I'm just picking out all the reactions where price has either reversed or stalled, and I'm just highlighting them so I can see them more easily. Fantastic. Okay, and now to plot the areas, I'm going to take my line tool and I'm going to work my way down the chart until I come to a reaction point. So the first reaction point I come to is this one here. And I want to encapsulate this reaction with the two lines. So I want to take the highest point the reaction occurs, and I want to try and place my line at the lowest point where the reaction occurs. And then once I've done that, I can delete my circle. So here we have our first support and resistance area. And then all we're going to do is work our way down the chart, picking out these reaction points, their lowest and highest levels. Another one here. Another one here. This one has more than just a one reaction from it, which is fantastic as it gives this particular area a little bit more weight in future use. As we come down a bit further, we've got this one here. To there. Actually, this one could probably come a little bit lower and encapsulate that reaction as well. And then we've got one down here to there, got another one here to there, and then we've got another one here to there, and then we've actually got another one here to there. And then we can delete our circles, as all of these reactions should now have been encapsulated in the areas that we've drawn. So that one has, yep, yes, 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 yes.
So as you can see, eyeballing isn't that difficult. It's just time consuming, especially when price is trading in a new range. But it does do one thing that's very, very important. It makes you interact with your price chart. It makes you see what your asset is doing and understand what it is doing and why the prices would be just so important. Now, if you notice, when we drew the circles or the lines or whatever you want to do, whatever your process is, I don't draw circles, I just use my eyes. You draw a straight line. Okay? But this line is not, and this is where we get a little bit of problems with especially new traders, is it's not a finite number. Okay? Because when you're talking about the euro being at 106.451.2, that's a very, very tiny number. Okay? Price isn't going to exactly stop on that number. So what you have to do is say to yourself, this is a price level. And in your head, say, okay, my price levels are, say, 5 pips or 7 pips. So when you draw your line on there and you draw it at 107.4275, you know in your mind it's 107.42 to 107.425. Because you're not going to set a specific price. It is a level. And what you're doing is you're looking for price to react, but it's not going to always react to just the high or just the low or just the body of the candle. So when you make it too finite and get yourself stuck, I'm going to enter the market at 102.4751 when it hits resistance, you're going to have a problem. So let me pop up my charts again and show you an example of this. Okay, so we're looking at the chart we started with. I'm going to take you over here to some of my other charts. And here is the pound Canadian dollar. See this, the two dashed blue lines here? This is actually the resistance zone, okay? It isn't two different numbers that we actually drew on our chart. It's just the zone or the area we give, because a lot of times you can't, when you're looking historically, you can't draw an exact price. You're going to put a line on, but it's not going to be the exact price because you may see 20 closes at that price level, but they're not going to be the exact same closes. So keep that in mind. It's very, very important. Here, I've actually colored them in. And so you see the resistance level and the support level, or simply price levels. But they are areas of support and resistance or price, where price will hem and haw. They are not very specific numbers. So you can see here the upper line, the strong support line, was drawn at 127.624, but the zone that I've actually drawn on there so you can visually see it is several pips wider. Same thing with the support level down below. It's drawn, the blue line is drawn at 102.1138, but the actual red lines with the colored yellow line, which is the zone, is a little bit broader. So that way you don't get yourself stuck in trying to do something to an exact number and waiting it for an exact number to come up. So like you see here, price here was well supported by that zone. But if we were looking for price to be supported exactly by this 102.17, it broke that line all of these times. But we weren't concerned with it. It stayed in that support zone and it was rejected by support, and it was held by support and was able to bounce up to this level. Came back down here to resistance, or to what was then support again, and we were expecting it to move up, but what did it do? It broke right through and kept going all the way down. And the only place it actually hemmed and hawed for a second was down at this resistance level, this support level, but it didn't hold. It fell all the way down. And then when it climbed back up, it ignored it entirely. So they're not always necessarily stopping points, but there are points of interest. There are points you should be watching. So now that you understand what support and resistance are and eyeballing, we have to start building a strategy. Okay. So now that we have the role of support and resistance lines, which from now on we will call zones, and that's because support and resistance are not a given line. If so, it would be super easy for traders to know, and every trader on the planet would have an entry order at that specific price. So they are more like zones and can be breached and pushed into. The trend may pull back at the price action as price action backs out of it, or maybe price action will succeed in breaking it for good. This is why we want to think of these points as zones. Now, the support and resistance zone strategy, or the price level strategy, will enable you to take trades exactly at the area price should reverse. Trading support and resistance lines are critical for every trader to implement into their system, regardless of how you're going to trade. You should always be looking at trend lines, volume, and support and resistance, no matter what trading strategy you're using, even if this is just your guide or your informational tool. So let's talk about building this into a strategy. So for step one, this is the first step in our support and resistance zone strategy. The first step for the strategy is drawing those zones on your charts. Well, we spent most of this class learning what they were and how to draw them. This allows you to easily spot where the price would probably reverse. After you do this, it will resemble a support and resistance indicator, only you now have the zones to take advantage of. And this is what makes you better than the guy across the way, a guy on the other side of the world, or the 25 other people that are buying when you're thinking about not buying. Because even though everybody can eyeball where you've decided to put your support and resistance line and how far back you've gone and how well you define that line and how many times you've seen it touch and how many zones you've come up with is very personal to you. And this is where your work, your knowledge, your experience, and your personality can make you find better trades than the next guy. So drawing zones on chart is better done on a higher time frame so that you can examine the main reversal levels and the more critical points on the chart. So even though support and resistance lines hold true for whatever price time you're looking at, you need to start off looking. You don't want to start off with a 15-minute chart and isolate those, because price can go up through them and down. You want to go back to a 1-hour chart, a 4-hour chart, a 2-hour chart, and find those levels that were critical, like we did on the little presentation. Then you can move it into a 15-minute chart and find more short-term levels. On a 15-minute chart, those levels might help you identify an entry and exit point. On the longer chart, it will help you identify whether you're going to go in the market and buy or sell. So when you're doing your support and resistance trading, a line with multiple touches is far better off, as it stood the test of time, because history always repeats itself, and this continues to happen time and again. And until you've actually done this and get yourself to believe that, yes, Traders do this over and over and over and over and over again. And the price that was crucial 2 years ago isn't necessarily crucial today. But if it was important 2 years ago and then it held out and the last time price was in the zone and it held out the time before that and is as reliable in today, it's more valuable. Okay. Now, sometimes when price moves to an area that it hasn't frequented many times before, you might have to go quite back a good deal of time. But you'll find how amazing it is that these lines hold true going forward. So make sure to leave spaces between zones, as drawing many lines will confuse you and worsen your trading decision. This strategy could easily be compared to our red zone strategy, so that shows you how to draw zones on your chart. Like you saw where I drew the blue line, then put the small red lines above and below, and then filled it in with the yellow. That is how you would build your zones. Then step 2. The second step is identifying the support and resistance zones. The second step is waiting for the price action to touch the zone. All of us want to anticipate. We want to see prices moving down, prices about to touch that support zone, but it doesn't. Okay. And even though these are zones that aren't exact numbers, once you've drawn on your chart and you've figured out in your head what range you're going to use, whether you're going to use 5 pips, 10 pips, 50, what your zone is, you're not going to make mental adjustments or emotional adjustments, say, look at that, it came close enough, it bounced off support. No, because the markets will outsmart you all the time. So you want to wait for price to come to that zone. Okay. Not come near it, not, oh, it's going to do it the next time. You need to wait for price to touch that zone. Break through with a low, come to, a candle close, come to that zone. So if it breaks that level, it may really be breaking or fake breaking. We also should see how a strong piercing candle that effortlessly breaks the level to ensure it will continue in the same way. Okay. We don't want to say that it broke that zone just because we get a small little candle with a low wicking that closed back above that zone. We want to wait for something to tell us it's bouncing off of that zone. What it is yet, we haven't decided. We're only in step 2. In step 3 is to wait for the candle which hit the zone to close. This will indicate the signal candle we are waiting for. If it closes, see, if it touched the zone and then closed back above the zone, it may not be a valid candle. What we're looking for is a strong bullish candle off of a support level or a strong bearish candle off of a resistance level. So we want to see how big the candle is. Is it big? Is it small? Are the wicks long or the wicks short? So when you can identify the kind of candle that then you will be able to decide whether to sell short or buy long. One or two things are going to happen. Either price is going to break through that support zone or that price level zone, or it's going to bounce off of it. We don't know. We have no idea. So trying to pre-guess this is bad business. So knowing the type of candle is crucial to identify whether the entry is valid or not. So how do we know if it's strong? What's the secret? So before we go any farther, here are some important factors in determining a strong candle. The spotting that specific candle on zones makes the difference between a winning trade and a losing trade. What is a strong bullish candle? Okay, it's got a long body. Okay. The body should engulf the 2 previous candles, and it's got a relatively balanced wick. So the qualities of a strong candle are long body, formed after the previous candle touched the level but could not break it, and entirely covers the 2 previous candles. Okay. Now this doesn't happen often. What we're trying to do is eliminate possibilities till we only have rare occurrences that this actually happens. Because what we're doing is filtering out possible trades, probable trades, so we're only left with a very strong setup. So what we're only looking for in order to make this trade, there's all other kinds of strategies you can have, but in order for this trade to be kicked off, we need that strong candle after it touches the price level. So here we can see the support held with this little body candle. And then we got a reversal of the market where the bulls came in, and they reversed the market enough to engulf the two previous candles. And this is our strong reversal candle. Okay, this is telling us we can enter the market. This downtrend is over. Not necessarily a downtrend, but this move down between the support and resistance level is over. And we will at least move up to the previous price, to the next, the prior price level. So this example shows how a strong candle should look. As you can see, the strong candle overpowers the one before. So will price action break that level, or will the resistance win the price reverses? We don't know. That's the problem. So when we get the strong candle, that's given us a good indication. But we want to minimize our risk, and we would put our stop loss slightly below that price level zone. So the fourth step is identify where you will enter a trade. You want this to happen at the pivot point or the turning point. Here are the entry criteria. Your entry should be slightly above or below, depending on which we're looking, the signal candle, which is the strong candle. This way, you are adding more confirmation to your trade to make sure that the price will move towards the direction you expect. Our stop loss should be placed on the other side of the zone, not too close to the level to give away, but to give it a little bit of space. So we've given our zone 5 pips. We want to go 5 or 10 pips below the bottom of that zone. Putting a stop loss there makes sense because this is the end of the trade. The price is unlikely to reverse after that point. So as you can see on this chart, we've used the entry point of our confirmation candle. We put our stop loss at the bottom of our, okay, well, this is reversed. Here we're doing the opposite. So here we're breaking above the resistance level. We're putting the stop loss slightly below where it broke through. We're entering after it broke above. So what are the steps we follow? First, we want to draw these zones on our chart so that we can easily spot where the price would probably reverse. Then we got the worst parts, the waiting period. We want to wait for price action to touch the zone so that we can set our charts on 1 or 2 currencies to watch. Because you'll notice as prices move between the zones and you're usually looking at the euro, US dollar, most likely the euro pound is coming close to, because they're all moving. Currencies, cross currencies tend to move with the same, not magnitude, but if the euro is very strong and pushing up, so is it against the crosses. Then we want to wait for the candle which hit the zone to close, as this will probably be the signal candle we are looking for. Now back to the currencies. If you have the euro pound, the euro Japanese yen, the euro dollar, the euro Swiss franc, and the euro is moving strongly up or down, so will those currencies. And sometimes by looking at the cross currency, you might have a better opportunity in the euro Swiss franc as opposed to the euro dollar, only based on the zones, not because the euro is still moving the same, but maybe the zones are more specific. Okay, after we wait for the candle, we want to wait and identify where you will enter the trade. And then last, we want to have our exit strategy, where to get out or where to put our stop loss. So that's a wrap. Now that we have learned from the support and resistance strategy how to draw zones, and how to trade them successfully, we also learn how to determine the direction that the price will probably move to so that we can have a better edge in our trading. Trading support and resistance, or trading price levels, and discovering support and resistance are pivotal, to your trading success. So before we go, if you notice on your screen, there's an area for handouts. I put together 2 handouts for you. One's called Support and Resistance Indicator Explained. That's going to wrap up most of this class for you and give you a written guide so that you can duplicate it on your own. And I've given you the technical analysis guide from investing.com, which is an excellent resource guide. There's nothing you have to sign up for, nothing you have to enroll in. Just click the download button. They'll download to whatever device you're using and then move them around when you're comfortable, because they're only available in the live class. So please do that now. And then lastly, I want to wish everybody a healthy and safe time during this stressful time around the globe. And if any of your holidays are coming up, have healthy and happy holidays. And hopefully next year we will be past all of this. So thank you for supporting us. And watch for our calendar. We have a lot more classes coming up in April because we know a lot of people are